to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like, it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Tom Lee, a seasoned finance expert, shared his insights on Bitcoin and the broader financial landscape in a recent discussion. He acknowledges that Bitcoin's price, now significantly higher than a decade ago, remains an impressive return on investment despite short-term volatility. While the current price may seem discouraging to traders, Lee emphasizes its long-term potential as a store of value similar to gold. He envisions trust in Bitcoin growing over the next 5 years, supported by its increasing adoption and usefulness. Lee also delves into market dynamics, addressing challenges like tariffs and Federal Reserve policies. He highlights how tariffs, initially perceived as inflationary, are now seen as deflationary due to their negative impact on consumer confidence and demand. This shift might prompt the Federal Reserve to adopt a less aggressive stance, creating opportunities in sectors like financials and digital asset. Bitcoin, while facing a potential retracement to $62,000 as forecasted by Lee's strategist, remains a critical asset for long-term holders. Looking ahead, Lee foresees a favorable environment for American-focused companies and small-cap stocks once trade tensions ease. He advises investors to remain cautious yet optimistic, focusing on sectors poised to benefit from economic adjustments. As Bitcoin and other digital assets evolve, the question remains: will they redefine global finance and investor strategies? Share your views in the comments below.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like, it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Generally, how are you thinking about the stock market?
I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning, but investors don't want to become too bearish because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and it's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. And
like down 5-6%, you mean?
Yeah, it could be.
Yeah.
I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, on the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy. I think that July to August was essentially, I would say, Fed driven.
Yeah.
And so that makes sense. because it felt like either the Fed made a policy error or the Fed turned hawkish.
Right.
But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think this is just a flesh wound right now, not the source of a drawdown.
Okay, so flesh wound, like how much upside do you think if we get a lot of those headwinds kind of out of the way, a lot of those uncertainties we just talked about, let's say we get the base case on that kind of pro-growth agenda that a lot of folks were excited about.
Let me be clear why I don't think it's 10%. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and like, oh, we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in.
Tom Lee, a renowned financial expert, remains optimistic about Bitcoin's long-term potential despite short-term volatility. He highlights that Bitcoin, once valued at just $100 a decade ago, has seen extraordinary growth. While he acknowledges that external factors like tariffs and market mood swings can temporarily hinder its performance, Lee firmly believes that Bitcoin's trust and utility will continue to rise. He envisions it evolving into a gold-like store of value over the next 5 years, attracting millions of new investors. For those considering the cryptocurrency market, Lee advises adopting a long-term perspective rather than seeking immediate returns. Lee also touches on the broader economic landscape, noting that uncertainties like tariffs and Federal Reserve policies are creating turbulence. While he foresees potential short-term dips in assets like Bitcoin, Ethereum, and Solana, he views these as retracements rather than bearish indicators. He emphasizes that the market has already absorbed much of the negative news and expects a rebound as economic conditions stabilize. Additionally, Lee highlights opportunities in financials and small-cap companies, which he believes stand to gain once current headwinds, such as tariff disputes, subside.
I mean, the reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? I mean, that's like a fact. Because I mean, if you put a 300% tariff or something, we don't really know how to titrate that number. And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House, I know that I have some opposing risk from the Fed today because the Fed's hawkishly paused. Well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral. But then everyone's playing a dangerous game because, as you know, you don't want to get stall speed in the economy, because the day the economy gets to stall speed, we open up the uncertainty of a recession, because, you know, a shallow recession, I mean, a recession is unknown once it starts. I'm going to say, I think the Feds, in terms of guessing their thinking, I think they view tariffs as an inflation risk. And that's governing their actions. But it's evident now that tariff risk is actually deflationary, because it's sapping consumer confidence, and consumers don't actually have wallet share to pay for higher prices. So it's going to create a demand decline, which is recessionary. So I would guess that the Fed's thinking around this is going to evolve this year, that tariffs are probably deflationary, and therefore the Fed doesn't have to be hawkishly paused. I think consumers are happy when markets are going up and when gasoline's cheap, you know, and then probably when grocery store bills aren't going up. So stock market hasn't gone up. It's kind of flat for the last 6 months, and you know, gasoline's not super cheap. And then, you know, as you know, it's not like it's gotten cheaper to go to the grocery store. So I think that there might be an intangible, like those who voted for change politically, their confidence has gone up. But then for those who like the previous political party, they have no reason to be cheering, right? So it's kind of messy to expect consumer confidence to be good. But, you know, I think another thing to keep in mind is, like, when economists talk about Canada and Mexico tariffs, they're expecting Mexico and Canada to go into a recession. So it's kind of weird for someone to think that the U.S. should have accelerated growth or inflation. To me, one of the, I think, sleeper winners from all of this is going to be the financials, because they've underperformed the last 15 years. So they really have not caught a break since the GFC. And finally, an environment that is better for the banks, and AI is actually good for business. And JP Morgan is, and all these banks show they made money through inverted curves, hyperinflation, tightest Fed ever. And now you have all this reversing. Another group that I think makes sense is digital assets. I do think so. Bitcoin is down, but it's our clients. It's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January that he was targeting 62,000 for Bitcoin by the end of March. So we're actually on our way to 62, but that's not a bearish development. It's just a retracement. And the third, of course, is small caps, because once the tariff talks go away, the environment is favorable for American-focused companies, which would be, small companies, and they'll benefit from lower rates and their multiples are lower. So I think it's still a big opportunity. But in the middle of tariff talks, none of these groups can really do that well.
Tom Lee emphasizes the resilience of Bitcoin and the importance of long-term strategies in navigating market volatility. He remains optimistic about Bitcoin's adoption as a store of value despite economic pressures. His advice highlights the importance of focusing on broader trends while exploring opportunities in volatile markets, such as small-cap stocks and financials. Lee's insights encourage investors to stay adaptable and forward-thinking. By balancing confidence and caution, his perspective offers valuable guidance for navigating uncertain economic landscapes. Where do you see Bitcoin and other cryptocurrencies in 5 years? How do you handle market volatility in your investments? Share your answers in the comments below.